Welcome back. We are now in chapter 7, and in this chapter we'll be discussing about terminal appraisal. So far in our earlier two chapters, that is chapter 5 and chapter 6, we have discussed about the various items that you can possibly encounter in the P&L account in the balance sheet. So the next logical step obviously would have been ratio analysis, but then we are taking a slight detour, right? And we are going to understand term loan appraisal, right, and working capital assessment before we go into ratio analysis, right? So this will be postponing a couple of chapters later. The reason why we are doing that is, unless you understand term loan appraisal and working capital assessment, you're not going to fully appreciate the ratios and various parameters we're going to calculate in the ratio analysis. So what we'll do, we'll first do complete term loan appraisal in chapter 7 and working capital assessment in chapter 89. So in 8 we'll be discussing the fund based limits, and chapter 9 will be discussing the non-fund limits. So once we are equipped with these basics, we can then move on to ratio analysis, which will be covering in chapter 10, right? So in this first segment in this chapter, we'll be discussing about the mindset that is very important to a credit officer when dealing with proposals in general, proposals, but more specifically terminal proposals. So you should understand that whenever a bank gives a loan to a customer, it's actually an exercise of risk management. You see, there is a element of risk involved in any loan that any bank sanctions to customers, because even before we sanction the loans, right, even before we sanction the loan, we definitely know for sure that some loans will go bad, because historically in any banking industry, not just in India, anywhere in the country, anywhere in the world, you see that there are some bad loans. Ultimately some loans are going to turn bad, what we commonly refer to as NPS. So some loans are obviously going to turn bad, so that is inescapable, right? So that is what history tells us. So some of the loans are going to turn bad, so we cannot escape bad loans. So what is this term loan appraisal about? So whenever we do a term loan appraisal or working capital assessment, so aren't we are not saying we are 100% certain that our decision is going to end up on the right side, right? So we know that there will be judgmental errors, right? Definitely we know there will be some judgmental errors we as bankers will be making, and then there will be some factors beyond the control of the bank. But even knowing all this, we still sanction loans, because banks are also in the business. See, they're in the business of lending. The safest way is to stop lending and not do any business. But then since banks are in the business of lending, they're taking this risks. So when we're talking of term loan appraisal in this chapter, we are not beginning with a foresight of what is going to happen. We don't know. We don't know actually when we go say for example, this is a new company, a newly incorporated company, fresh sanction of term loan. We don't have any backup history. We don't know how the company is performing in the past. We don't have anything. We don't know anything about the company. The promoters are new to us. They are new customers. They're new constituents to us. We don't have any track record of this customers. So when we do this terminal appraisal, we are not beginning with any a premonition of what's going to happen in the future, whether this company is going to succeed or whether its products are going to click in the market. We don't know absolutely nothing. So we're basically making a judgment here. So we're making a informed decision. We're taking various inputs from various sources, including the promoter, from the market, right, from the industry, and we are making a basically an informed decision, right? So we are considering factors such as the promoter profile, right? We speak of the promoter profile. We understand the industry scenario. We understand the macroeconomic scenario. Well, not just about this industry, but what is the economic scenario in general. And taking various factors into account, we take an informed decision. So in that informed decision, there's a element of risk involved. So you should understand that we may still end up being wrong about a decision. The loan which we sanction still might end up being bad, in spite of all our the precautions we might take, right? Because this, you should understand that lending is basically an exercise of there is an element of risk involved in lending. So we can never eliminate risk. We can only manage risks. So before starting term loan appraisal, I want you to keep the above points in mind. You should understand that, see, the technical expertise is one aspect, right? This is one aspect of any loan appraisal which you take up. But you should also understand that there is something called the profile of the sanctioning authority. You see, when we speak of when we want to gauge how much risky a particular advance is, some people just see the overdue figure and the repayment record, and they just tell, I mean, this is a risky advance, I mean, not doing well. And even before looking at the hard facts, they can come to an assessment as to what type of an advance it, how much risk is involved in the advance. But it can also be seen in the profile of the sanctioning authority. You see, in your banking career, you'll be coming across a variety of sanctioning authorities. Some are conservative, extremely conservative. You must have come across such people, conservative sanctioning authorities who are very averse to sanction, who are very averse to sanction. They are risk averse. They don't take risks. I mean, if it is not within their powers, if the sanctioning authority is of a higher power, manage. Here is the person we are discussing. If the proposal falls in a higher proposal, falls in the higher powers of some up higher authority, they definitely he will recommend. Definitely he or she will recommend. But when it comes to sanctioning under his or her powers, they'll be averse. You will see a lot of people who are risk averse. I mean, there could be various reasons for this. They might be by nature risk averse, or they might be nearing retirement. Some might be awaiting the transfer promotion, or some actually may have in the past been very hit hard by due to some fraud. So they will not hesitate to recommend a proposal to higher authorities, but they will not sanction if it is in their powers. They won't take that risk. Then there is another category. This is one extreme which we are taking. This is the conservative banker. Then there is a aggressive banker. These bankers, they just turn a blind eye to any gaps in the proposals. They just turn a blind eye. The gaps are staring right at you, but they ignore them, and still they go ahead and sanction it. Some may be aggressive by nature, some may be trying to reach the targets, and hence they are aggressive. Some may be prodded by the higher authorities to improve the performance. So various reasons. So as you step into the real life of credit appraisal, we are now starting from this chapter. We're actually entering into the real aspect, the hard facts of credit appraisal. Till now we understood the theory, but now we now slowly entering into the practical aspect of credit appraisal. And at this beginning stage, at the beginning stages itself, you have to understand a very important point. Credit is ultimately all about mindset. You see, credit really is all about mindset. There will be gaps in any proposal which you come across. I'm telling you, there will be gaps in any proposal, no matter how top class a proposal will be. There will be gaps in every proposal. Some might be trivial, right? Some you can ignore. Some you can stipulate conditions and get away with it. Some cannot be resolved. I mean, there will be various type of gaps. But then it is your mindset that will be determine how you approach these gaps. The point I'm trying to make here is, if you really want to decline a proposal, if your intention is to decline a proposal, there will be enough gaps in any proposal for you to reject it. No matter how top class a proposal can be, if your intention is to decline proposal, you will always find enough gaps to reject it. On the other hand, if you want to sanction a proposal, you will find every possible justification, right, and mitigating factors to cover up the gaps. So the foremost thing that you have to keep in mind as a credit officer, the first thing, even before we start appraisal, like term loan or working capital, the first and foremost thing you have to keep in mind is your mindset should never influence the appraisal process. See, a loan has to be sanctioned based on purely on the merits of the proposal. It has to be nothing else. A proposal needs to be attended and judged purely on its own merits. See, you might be having your own risk appetite. You could be a conservative banker, or you could be a aggressive banker, or you may fall somewhere in between. But that instinct that has to be curbed. Your mindset should never influence the decision making process. The proposal needs to be the proposal needs to be judged purely on its own merits. Of course, as human beings, it's inevitable that a certain element of subjectivity will creep in. I mean, we cannot help it. But even in those circumstances, what I'm saying is, as a first step, you should be undertaking the credit appraisal in a objective manner. You yourself should be first of all knowing what is the merits of this proposal, and then maybe you can oblige on a couple of points which are not very serious. But then, as an advance officer, you should be first of all aware of all the risks and all the gaps in the proposal. Even if you go on to ultimately sanction a proposal, even if you go on to recommend a proposal, even then you should be first of all be aware of all the risks and the gaps. You should be objectively and critically analyzing all the gaps, all the risks in the proposal, and then you have to highlight this to the concerned sanctioning authorities. There will be cases, definitely on a practical side, there will be definitely cases where you cannot discuss these gaps in the proposal, because if it is discussed, you cannot sanction it. So obviously you will be advised by the higher ups not to put certain gaps in writing in the proposal. Okay, fine, but at least they should be discussed threadbare with the respective authorities even before the sanctions taken up. You should not hide facts. See, the point I'm trying to make is, you should not hide gaps. When you are aware of certain risks, some gaps in the risks and gaps in the proposal, you should bring it to the knowledge of the sanctioning authority or the other higher ups in your department. No point should be left undiscussed. Yeah? You should be bringing them and put it in forward of the sanctioning authority when and the final decision will be taken on them. Because you see, ultimately when an account turns bad, this is where you have to be careful. It's not about today, it's not about today. When this account which you sanction now, aware of the gaps in the aware of the gaps, there are gaps, but still somehow the account was sanctioned. And then when this account turns bad, say 3 years or 5 years later, then there will be some accountability study conducted. You should not be at risk. See, nobody should find fault with you, right? Nobody should find. This is exactly the reason why credit is something which many people are averse to. They're scared of risk because it is a very the feeling it's a very risky department, in the sense that you take some decision today and some 3 years or 5 years or 10 years down the lane that will come back to haunt you. I mean, for no fault of yours. I mean, there will be many cases where the decision is taken by somebody else, right? You are just a small cog in the wheel, but then you will be blamed for it. And that's why it is important not just to think about saving the bank. It's also about saving your career. Saving the bank, ultimately, yes, yeah, your appraisal skill should be objective, and it should be thorough to save the bank from any bad loan. But also you should save your career. When you're attending a proposal, when you find any gap, please bring it to the a knowledge of the sanctioning authority. And if it cannot be put into writing, at least stipulate proper strong conditions. In many cases, by stipulating strong conditions, many credit officers have gotten away, right, in accountability studies. That's a very a wonderful way to save yourself. When you stipulate suitable conditions, when you cannot discuss certain aspects in the proposal, by stipulating suitable and strong conditions, you can get away in an accountability study. You should understand, right? Finally, you should understand the credit appraisal needs to be taken with a not just with an exceptional level of domain expertise. That is one aspect. The things we are going to discuss, the subject knowledge, the financial part, that is one part of it. That is your finance skills and the appraisal skills. That is one part, right? But also there is something called application of mind, right? You'll ultimately see that credit appraisal is more than 70 to 80% common sense. It's plain common sense. As we are going to see shortly, it's not very different from how you would lend to an individual in your day-to-day life. As an individual, you might have extended loans to a number of people, to your neighbors or to friends or relatives or colleagues. I mean, you must have done this lending, and the bank lending is nothing very different from this. I mean, there will be some technical issues, but ultimately it is plain common sense, right? So it is that application of mind that is ultimately going to save you in many instances. This is one part. So what we are going to discuss, the finance part, the financial projections, calculations, that is one part, right? But term loan appraisal and in particular term loan appraisal, right, is to a very large part common sense, right? Please apply your mind thoroughly while attending to any proposal. So these are the few points I wanted to tell you before we begin our chapter on term loan appraisal. So we'll close this segment here, and in the next segment we'll be starting about the various stages of appraisal, or the various types of appraisal that a term loan proposal should be conducted. See you in segment 7.2.